Hey guys, today we're going to talk about how to pay off your mortgage early. Most of you guys, everybody's dream is like buying a home. That's the lifetime goals for most of you guys. And once you buy a home, there are a lot of costs involved, right? You have to pay a mortgage for 30 years. Every month you have to pay lots of interest, principal, taxes, insurance, HOA, homeowners association fee. There's so much cost involved. Everybody kind of after they get into buying a mortgage, they realize that there's so much cost involved, right? In this video, we're going to give you 5 ways you can actually pay off your mortgage earlier than like you probably like 30 years. If it's 30 years, you could actually pay off within 25 years. You could save that 5 years worth of money is like lots of hundreds of, sometimes it's hundreds of thousands of dollars, but sometimes thousands of dollars. But it's still you're saving a lot of money. So that's a goal for this video. Just keep watching. Maybe I'll start with the first one is like you pay, let's say you pay $2,000 a month every month. That's your mortgage, including principal, interest, tax, insurance, right? Everything. And you could just pay that in bi-weekly instead of monthly. Let's say $1,000 every 2 weeks. $1,000 every 2 weeks, right? That basically gives you $2,000. But you're saving that interest on the 15-day, right? That small thing actually matters in a longer run. When you do 30 years, 360 months, right? So it's actually matters. It saves you almost 5 years worth of payment, right?
Right.
That's a good thing, and you're going to pay the same amount anyway. You have anything to add, Randy?
No, yeah, that's spot on. Yeah, but if you have any questions, feel free to put it on the comments box.
And most people,
because we don't want to kind of go into deep. We don't want to go into detail because it might confuse you.
right?
But if you have any questions, feel free.
Right, exactly. And most people don't realize this. This is a simple technique, right? You just pay, split up the payment, pay every 15 days. You're going to save a lot of money. Just think about that. And another one is pay one extra monthly payment. Like let's say you $2,000 every year, just pay $2,000 extra to your mortgage. That's going to go to your principal anyway. It's not going to go to interest. It's the whole 2,000 is going to go to your principal, right? You're going to save again. You're going to save more money on that. If you combine the first and second one, you will be saving more.
So how do we determine whether it goes towards the principal or interest? Do we have to talk?
No, like anything other than like you pay $2,000, that's your mortgage amount. You're paying the same month another $2,000. That's automatically goes to your
Automatically
principal.
goes. Okay.
And most likely there shouldn't be any prepayment penalty. Just make sure with your lenders, and there is no prepayment penalty.
So prepayment penalty, I think, only comes when you're paying the entire mortgage in full. Is that right?
No. Yeah, you can actually pay entire mortgage in full next day.
Okay.
Prepayment penalty comes only when it's a jumbo loan, like it's not a conventional 30-year loan. It's something like 15-year loan, or it's a 5-arm, adjustable rate mortgage, or 7-arm. But if 30-year conventional mortgage, there shouldn't be any prepayment penalty. That's the rule, federal rule. At least in
that's
US.
the federal rule. Okay.
Right. So there shouldn't be any prepayment penalty for the conventional loan. The third one is like everybody knows that right now the historical lower rates when this crisis is going on, right? 3.2%, 3.3%. It just keep going down and slightly up and down. The Fed is adjusting the rate, try to make the economy working. So that take advantage of that. Like you might have a 4.5% interest, right? The 1% reduction in your refinance rate, it's going to save around $200 a month. Just you will be paying less, right? But what we would suggest, you just pay the $200 extra, pay the same amount, like $2,000, but you refinance it. That way, you are actually paying the $200 extra to the principal, and you would be paying your mortgage early that way.
So yeah, even if you're saving, you try to put it towards principal, so it's kind of killing two birds with one stone kind of deal.
Right, right, exactly. There are two things involved, right? Time and interest. Those two components, if you can reduce it, if you can reduce the interest, if you can reduce the time, you're actually saving a lot of money in the mortgage. That's those. Just remember those two. And the fourth one is the dropping the PMI. Like if you paid less than 20% down payment, right? You most likely will have a PMI, private mortgage insurance, right? You probably pay anywhere from $150 to $300 based on your loan amount per month, right? It's just down the toilet. It's not going it's not going to anywhere. You're just throwing the money out. So what we would suggest you to do appraisal. I think you are done that, right?
Yeah, I just got it done recently, Venkat, and what I want to emphasize is you have to call them. Okay, so when you know that your market price is appreciating, you call your lender and tell them, I want to get an appraisal done. First thing you need to do is call them and tell them that we need an appraisal done, and they come and do it, and then make sure that it's you are reaching that 20%. Piece, that's the cutoff point, whether you're deciding point whether you have to pay PMI or not, right? And then you have to tell them exactly what you want. You have to tell them to do an escrow analysis. Okay, right. You have to tell them. I'm pretty sure every lending company is different, but just tell them that I got it done, and make sure you do an analysis and make sure you reduce or you get rid of my PMI. You have to tell them specifically because they're also business, right? They also want to get money out of you. And because, so you have to be very specific. You tell them exactly what you want and get it done. So yeah, like you said, I got it done recently, but I had to tell them like specifically, even after getting the appraisal done, they kept charging me. So then one day again, I called them, hey, why you didn't reduce it? So they said, oh, sorry about it. You have to tell us to do an escrow analysis.
So you have to basically push those lenders.
Push the lenders.
They don't want to let it go, right?
Yeah. But actually, it's a great saving. Like you said, I saved closer to $170 or something from my monthly mortgage, which is huge.
Right, right. Yeah. Another thing is you can actually look into Redfin, Zillow, or other websites for your home value. Let's say you bought it for $300,000, right? And you paid 10%, $30,000, right? But it become $400,000 now. The value actually increased up. So $100,000 you already have 20%. You already paid. Your things are expanding, right? So you already probably have more than 20% equity in there, right? You have $120,000 put it in because your market value is 400. You put 30,000, right? So 130,000 you put it in for $400,000 house. So that's like 25 to 30%, 30% actually. 30% you already have in there. So they should remove after they do the appraisal, right? You already have that market value increased, and you already put that money. So they should remove it automatically. Yep. That's another thing. You can take a look at Redfin, Zillow to understand the market value. And the last point is most people actually get kind of shy away from this. It's a HELOC, right? Home equity line of credit. It's basically like just now what we were saying, right? $300,000 house, you'd become 400, the market value, and then you have 130,000 equity in that house, right? So you can actually basically lender can loan you 130,000 for a different rate. Say you paid for 5% your mortgage rate several years ago, and then now it's 3.2%. So they can lend you the HELOC for 3.2%, and then take the money and pay off the 5% loan. So you eventually paid off that loan, but you have a HELOC on the house, right?
Yeah, that's a good point, because most of the time, people think, I myself heard from people that they think that HELOCs can be used only for a particular particular purpose, like getting or if you're purchasing new appliances or something like little things. No, you can even use HELOC even for that's a good point, because that's a misconception that people have. It can be used only for this purpose, that purpose. but you can use it to use it for this real estate gains too. So thank you so much for sharing that.
Yeah, so I hope you guys got something out of it. The 5 different ways to reduce your mortgage early. You probably just follow this 5 ways. You will be saving tons of money in a
Yep.
30-year period, and you will thank us later. Thank you guys for watching.
Thank you.